In this presentation, we will record transactions related to a job that is closed and invoiced within QuickBooks Pro, QuickBooks Desktop. Here we are in our practice problem 1 job cost tracking. Open windows are open. You can open the open windows by going to the view dropdown and the open windows list. We're now going to open up our trial balance by going to the reports dropdown. We're going to go to the accounting and taxes, and then that trial balance, we're going to be adjusting the dates up top, and they will be 01/01/20 to 12/31/20. Then the next report we want to take a look at is the job report. So if we go up to the jobs report up top, we're going to go down to the jobs and mileage. We're going to go down to the estimate versus actual summary report. We're going to select that item, and there we have it. So this cost column then is supporting what is on the trial balance at the 760 in the work in process. Now let's consider our Excel sheet to see what we're going to do now. If we go back to the Excel sheet, you'll note in Excel and recall that we basically have two accounts that are doing the same job as the one account in Excel. These two accounts adding up to 760. The only difference is that we moved the completed item to another account called finished goods here, whereas in QuickBooks we just indicated that in the report, if I go to the job estimates, that these two have been completed, but they're not closed. They haven't yet been shipped, in other words, or invoiced, which is what we are doing now. So that is going to be supported then. This information is, of course, supported by the job sheets. So here are the job sheets. Here are the two ones that are closed but not yet completed. They add up to, if we were to add them up, they add up to the 500. That's what's in the closed jobs. This job is still open. Now what we're going to say is this is the one we're going to invoice. So of the two that are closed, we're going to invoice job 14. And what's going to happen once we do that? Well, we're going to have to move this amount then from the finished jobs. This is the cost to cost of goods sold. And we're also going to have the income portion to it as well. So notice this whole process we've been tracking basically the cost in the journal entry format. Now we need to think about, of course, the revenue side when this happens as well. So this would be the standard kind of transaction you would think of when you create basically a journal entry or a sale of like inventory. And that transaction would look something like this. We're going to say this happens on 1/31. And usually we would debit, let's say, accounts receivable because people owe us money. And then the credit would typically go to sales. Now, the fact is we don't know what those two amounts are really because we're going to take them from the job sheets. So, for example, we might say that whatever the ending cost is, I'm going to mark it up by 30%. Or we can go by our original estimate. So we'll take a look at more of that when we go to the Excel side where we did make an estimate. But now let's just say that we're going to say, hey, here's the deal. We're going to give you an estimate, but we're going to take our actual cost and mark it up by 30%, and that's what we're going to be charging you. So we're going to say, all right, well, the cost then for the job was the 186,000. I'm going to take that times 1.3, which is 130%, or 30% plus that. In other words, obviously, if I took the 186,000 times 0.3 plus the 186,000, that would be the 241.8. So we're going to say there's going to be the amount that we're actually going to invoice on it. We're going to credit this amount. There's the same amount. That's going to be the debit, and the credit for the sales side, where we have the accounts receivable, would be increasing. And then the sales is going to be what we're calling our revenue account, increases in the credit direction. That affects the net income. Now we also have the other side, which is the cost of goods sold, the expense side of things, and the fact that the inventory or our finished goods is going down because we're completing the job. So what we do now, this is what we actually gave away. This is what we created or did. And so we're going to say that's going to come directly from the job cost sheet, which is going to be that 186,000 and the credit being to finished goods. If we record that, then we're going to say that this is going to be the expense in essence. And that means that the net income is the difference between the two. This is income, not a loss. It's the credit minus the debit. Then we have the finished goods inventory, which is going to be going down. And that leaves us with the 314. Now we need to support these two accounts with the job sheets. So now with the job sheets, I have to indicate in some way what's going on now. Well, this one is no longer here. We're going to say this is closed. This is closed and it's shipped. I'm going to say that's how I'm going to indicate it on this sheet. And so we're going to say this one's shipped. It's gone. This one's closed, but it's not shipped yet, we're going to say. So it's still basically, we haven't billed for it in essence. And so that means that the open job is going to be this one. This is the only one that's still open. So the work in process account ties out to the open job. The amounts that are closed are only this account. This account is now closed. That ties out to the finished goods account. And then the rest went to the cost of goods sold, which is the 186 going to the cost of goods sold account. Now, we typically will track the balance sheet accounts because they're going to be the permanent accounts. The temporary accounts are going to be those that will close out to the sales. So notice we had to do 2 steps here. We had to record basically the transaction, then adjust the job sheet. Now, this gets a little complex within QuickBooks. We're going to have to do the same kind of thing here. On the trial balance side, if I go to the trial balance, we could say we can remember what's going to happen. Well, we have to have accounts receivable is going to go up. Then we're going to have an income account, and then the cost of goods sold, and then the work in process, which is where we have the finished goods, is going to have to go down. So the starting point here is, well, and then on the other side of things, we're going to have the jobs. And I would like to reflect on the jobs, the fact that the job 14 is closed and been billed or invoiced on it. All right, so to do that, starting off, we're going to go back to the home. And we're going to be wanting to create an invoice. So I'm going to create an invoice, and we're going to create it for job number 14. That's the one that we're going to say is complete. Now, there's 2 different ways we can populate this invoice. So this is saying that if we take this amount, I'm going to say this is going to be the estimate that we're picking up. In other words, you'll recall we made an estimate at the beginning, and now this is picking up that estimate. So if I say okay, then and now I'm not going to pick up this item in this case. I'll show you both. I'm going to close this one out. You'll recall we made an estimate here, and now it's basically giving us that estimated numbers and the rates that we had for the estimate. So once again, you'll recall if I go back to the home tab and I go to the estimates and I say back, this is 14. This is the estimate that we marked up by that 30%. So this is what we thought the cost would be, and it's not exactly what the actual cost was, and then we marked it up by the 30% to get to the total numbers. So if we just basically agreed on this, we said, hey, no matter what happens, we're gonna go by this 237.9, closing this out. Then on the invoice, this is gonna create the 237.9 that's gonna pull directly from the estimate. Or on the other hand, we might say, hey, that was an estimate. We're using that as the estimate. And then we're going to use some other method to allocate the actual costs, and we're going to be going off of basically the actual costs when we complete the process or complete the job. So if I close this back out then and I don't record it, then you'll note that when we entered things such as checks, let's open up a check and go to the prior checks. The other way we can think about this is we entered some items that were billable. When we assigned them to an item, we created them as billable. Those billable items then can be used to create our invoices as well. So that's the second way we can create it, and that would be charging our invoice more on an actual cost. So we say, yeah, we estimated you, but this is the actual cost, and then we're giving some give for the difference for the actual cost. We're going to invoice based 30% markup on the actual cost. So if we were to do that method, if I create the invoice and I go to job 14, it's going to say, hey, do you want to pull up the estimate? And I'm going to say, no, I don't want to pull up the estimate. I want the actual costs. So I'm going to say no. And then this one says the customer job you've selected has outstanding billable time and or costs. We want to select the outstanding billable time and costs. That's the one we want. So I'm going to say, okay. And then within, you'll see there's 6 items over here in the items tab. That's the one we want. So I'm going to just check them all off, or you could say select all. And that's going to be all the items that we assigned to job 14. So I'm going to say okay. And there we have them. That's going to be the 186,000, the actual cost that we assigned out. Now, they're in order by the items. So they're in order by the items here. Now we can check this number because we can go back to our job cost sheet and say, let's take a look at the job cost sheet, and it should add up to the 186,000. Or we can even go into more detail than that, go into the reports drop down. We can go to the jobs, and then we're going to go down to the detailed report. We want to take a look at job number 14 and say, okay. And so there's the detail on it, job number 14. We're on the cost column, and it adds up to the 186,000. So if those things don't tie out and you missed a billable item or something like that, you could basically use this as the detailed report to further tie it out properly. Now we're going to go back to the invoice, and we're basically going to say, we're going to take this and we're going to say, hey, we marked it up then by 30%. That's what we agreed on. Here's the actual cost. We're going to mark it up by 30%. So I'm going to call this the markup. So this is going to be the markup. And I'm going to say, yes, we're going to add that one. We're going to add the markup as an item. It's going to be a service item. I'm just going to call it the markup. And I'm going to say, okay. And then okay. And I need an income account, would be nice. So I'm going to choose the income account down below and then say okay. And we're going to mark it up by 30%. So I'm just going to take 30% of this 186. So 186,000 times 0.3 or 30%. And that'll give us the 55.8. Then I'm going to tab so it calculates out. That brings us to the 241.8. That should match what we have on Excel. So that's going to be the 241.8 in the sales amount. So if we then record this, what is this going to be doing? It's going to be increasing accounts receivable, because it is an invoice. The other side's going to go to sales. What it's not going to be doing is recording the cost of goods sold and reduction in inventory. So we're going to have to figure some other way to do that. Let's take a look at that. Before we do, however, note that the date should be 12/31/20. So the date is 12/31/20. I'm going to go save and close and say yes and yes. Then we'll go to the trial balance in the open windows. Within the trial balance, we see the accounts receivable. Double clicking on it, we see our invoice. Double clicking on it, there's our transaction. If we close this back out and we close this back out, then the other side of that should be going to income. There's our income account. Double clicking on that, and there's going to be our detail. It's breaking it out by all the components. If we double click on any of these, it'll take us then back to our invoice. Closing this back out, closing this back out. What we don't see is the cost of goods sold side, and we don't see any effect on the work in process side. So we're going to have to do another transaction in order to do that. We want this to be reduced, and we want to reflect it somehow, you'll recall, in the job cost reports, and therefore we want to use the items in some way. So we're actually going to set up some special items in order to do this transaction. So we're going to go to the lists drop down up top and the item lists. We're going to set up two items within it. I'm going to go to the item rise up down below, and I'm going to go to the new item. It's going to be, I'm going to call it, so it's in a different section, an other charge. So it'll be at a different section in the report. I'm going to call it this cost of goods sold close. And I'm going to copy that. I'm going to put that down below as well. I'm going to check this one as we have seen in the past. And we're going to put this to the account of cost of goods sold this time. This one's going to be going to the cost of goods sold, which we do not have. I'm going to set it up. Cost of goods sold. Tab. Set it up. And it's going to be not an expense, but a special expense, cost of goods sold expense. We're going to save that. And then the other side of it, I'm going to keep it going to cost of goods sold as well. And I'm going to say okay. And then we're going to do this again. We're going to set up another one. So we got the item rise up. We're going to go to the new item. And this is going to be, once again, a other charge. We're going to have this be the work in process. I'm just going to call it whip close. I'm going to check this off again. We're going to say this is going to be going to the account of the work in process account, the whip account. And then the other side is going to be going to the cost of goods sold. So I'm just going to take it to cost of goods sold. There's that one. So now I'm going to close this out. We're going to use these items and a form to do what we want to do on the financials. So I'm going to go back to the home page, and we're going to use the forms to drive this transaction. So we have to use the forms so that we can use those jobs. So we're going to use the check and write another one of these funny kind of checks, which don't have any actual number involved in it. So we're going to say the check is going to be on 013120. And note, you might want to actually make another checking account. I probably should have set up another checking account so you don't have these 0 checks in your actual register. So you could actually set up another checking account and just call it a banking clearing account, so that you know that anything that runs through here should be subbing out to 0. So any transaction that's not actually an increase or decrease to the checking account, you might want to put into an account you're going to call the clearing account. And that would be, so it doesn't, you don't see those transactions when you're reconciling and things like that. So it could be more clear to do that. All right, so then we're going to go down to the items. We want to be on the items side. So then we're going to say that we have the 2 items, which are going to be the cost of goods sold close. And this is going to be for the amount of the $186,000. There's not going to be any job here. So we're not going to be recording any job. And then the other is going to be that work in process close that we set up. That's going to be for negative $186,000. This is where we record the job, which is job number 14. So that's going to be the key. We don't want it to be billable either. So that's going to be the key, right? We're gonna have the cost of goods sold up top, and then we're going to have the work in process. This is the one we're going to be recording the job to. Now, what's this going to do? It's going to be pointing to where we set up these items to go. This cost of goods sold account, we said we wanted it to go to the cost of goods sold. So note, this is an item. The item is pointing to cost of goods sold, because when we set up the item, that's the account we chose. This is work in process. The work in process is pointing to the work in process account. This is an item. The item is pointing to the work in process account. And then this one has the related job related to it. Therefore, it'll show up on the job sheet. Let's check it out. We're going to say save and close. Okay. And then we're going to go back to our trial balance and see if it does what we think it should in terms of journal entries. In terms of journal entries, the work in process is now at 574. Double clicking on it, we scroll down and we see that we have the 186,000 here. If we double click on that, we get to our check, closing this back out and closing this back out. The other side then going to cost of goods sold. There's the 186, double clicking on it. There's our transaction there. What happens to the job report? So this, if I go back to the work in process, it's at 574 now. If I go back to our report here, the sum of these two in Excel, 574. So that amount looks right. What happens to the job report still? So let's take a look at the summary report. And you'll see the total cost then goes back down to 0 as we post this out. We can also change the name of the report too. This is completed now. I'm going to call it closed. So I'm going to go back up top and I'm going to go to the customers, the customer center, and we're going to say that job 14 is closed. So I'm going to double click on it. I'm going to change the name again and I'm just going to call it closed, or just close. And then I'm also going to put that in the job information. Instead of pending, we're going to now say it's closed. And then I'm going to say OK. And then if I go back to the report, closing this back out, and we go back to our report, then it'll be reflected as closed instead of completed. So, and now, of course, we have a 0 balance here because we assigned the cost to it. The cost is now being removed from it. Therefore, the total amount, the $574,000, is now reflective of what is on the trial balance of the $574,000. If we saw the detailed report then of this particular job, let's close this one back out and let's open up a detailed report. Let's close both of these. And then reports, jobs, we're going to go down to the detailed report. And then we're going to choose job number 14. Job number 14 and OK. Here is our job on the detail. So here are the costs. We're concentrated on the cost items. Here are the costs. And then we had the work in process. And this, notice it's down here in the other charges because we set up that item as other. And that closes it back out, bringing it back down to 0. So that's how that's going to be reflected here. And then, of course, on the revenue side, we've got the amounts assigned out to the direct materials, the direct labor, and the overhead, and we can compare then the revenue actual and the estimate. So these are the actuals and the estimate, and of course we have the differences there. So if we go back to this report, the summary report, then this process does a great job to zero that out and bring us back down to zero. Now, you can also use the filters to do similar type of options. Now, we've labeled it here, so if you label it, this is the closed job, this is the completed job, so this is the one that shouldn't be reflected on the balance sheet. These should too, and you can also use filtering options. So if I was to filter the options and use those filters again, and notice we set up the job class. So if I scroll down and say I want to take a look at the job status, and within the job status, I want to see those that are in progress, then I can say OK. And the only one that's still in progress and hasn't been completed at all is going to be that job number 16. The other one has been completed but not yet billed for. And so if I go back to the customized reports and I go to the filters then, and I go to the job status, and I want to look for the job that is closed, all jobs closed, there's one, of course, here, and I say OK. Then we get that closed job. And then if I want to look at the customer status and I want to filter and look at the status for the jobs that have been completed but not yet billed for, those are going to be the pending jobs. So we're going to say pending jobs, and then we can pick those up. So those are some ways you can use the filtering options. Notice we changed the name to indicate that, and we changed the options as we finished the jobs so that you can use the filtering by status. So then I'm going to remove that filter, go back to our original report.